Show with Victor Jones. Welcome back to the show.
Tom, Tony, Tasty Nation, how you guys doing?
Doing good. Thank you so much for asking.
It's a glorious day, gentlemen.
Yeah, why?
What do you mean, why? Are
Why?
you kidding me? Stocks are up. Are you kidding? Stocks are up. Nasdaq's up 2%.
John Q. Public is happy.
Oh my
Hey,
goodness!
hey.
What if I told you?
You're a
YOLO
trader. You're a
Nvidia?
trader. Traders are the when public's
Most
happy.
miserable SOBs you've ever come across.
Yeah.
I understand. But what if I told you I came bearing an investment opportunity for
Bearing
both of you?
gifts.
I know, an investment opportunity.
I just
gentlemen.
got filled on a couple of investment opportunities.
It's a very little-known investment opportunity.
What is it?
And I want to give you a couple of numbers that you can invest in today. Are you ready, Thomas?
Yes, I am.
What
Ready.
if I told you you can invest in a company who's growing revenues by 265% year over year? What if I told you
Does anybody else know about this?
almost nobody
Almost
knows
nobody.
about this investment
Okay.
opportunity? What if I told
So it's a
you,
privately
Thomas,
held company that nobody knows about, and I'm getting a first look at somebody making 200% a year.
let's just say...
So you sold 4 hamburgers this year, right? Yeah. So
What
got
if
it.
I told you net income for this company
Yes.
was up over 700%?
My question would remain the same.
Mm-hmm.
Does anybody know about this company, and is it priced accordingly?
Here's the good news, Thomas.
Yes.
It just received a couple of upgrades from well-known banks like J.P. Morgan. In
Really?
fact, they've raised their target on this underlying name from $600 to $850, Thomas, which is well above where it's trading right now. And Bank of America raised their price target from $800 to $925. My question to you, gentlemen, is I wonder, what does it mean when you see a stock, one of the top 7 largest companies that's up 13% year over year, and you've got 2 of the largest banks on Wall Street upgrading them after that move? What does a trader like you think?
Oh my God, these banks are even stupider than I thought the first time. You know, I gave them no credit initially, but now I really give them like less than 0. You know, what really bothers me is that anybody that upgrades like a stock like Nvidia today, it's just please, like, are you freaking kidding me? I've seen a lot of dumb things in my career. It's just put that like right near the top of the list. Hold on, Nvidia's up 100 right now. Let's just say
97. Yeah, it was just up
let's
100.
Let's round to 100, okay?
Round to 100.
Round to 100.
You're amongst friends here. Sure.
Okay.
Sure.
Yeah. Well, let's just round to 100.
Sure.
But let's say this. This is getting, how crazy can this get? You guys were around in 99, 2000. How crazy can this get? You've got BlackRock saying buy stocks when we're near 5,000. You got Goldman saying 5,200. You got banks giving new targets of 5,400. You've got the day after Nvidia releases earnings up 13%.
I don't understand your point. What's your point?
My point to you is how crazy can this get to the upside? Traders love
You're-
two-sided markets.
He wants to
and
know
we're
if
not
he can
getting a
jump in
two-sided
yet. He
market.
wants to know if he can
Talk
jump
me-
in.
You're missing-
talk
you're
me off
missing-
the ledge, Thomas. Talk me off
You're not
the
the ledge. You mean talk you from ruining your rest of your life?
Yeah. Yes.
Yeah. No. I mean, first of all, let's understand what 1999 was, because you were too young.
Okay.
Okay. So
13 years old, by the way.
13 years old. Okay, in 1999. Well, 1999 was a different story, because 1999, we were trading the S&P. S&P stocks didn't move. I mean, yes, the NASDAQ went up, but there wasn't really a way to trade the NASDAQ in 1999. Believe it or not, there wasn't. Like, Qs really didn't exist. The NASDAQ futures didn't really trade. There wasn't a way to trade NASDAQ. So you had this crazy NASDAQ product that was exploding. And the cash went from, the cash NASDAQ at the time, I think, went to 5,000, which later went back to 1,000. But there wasn't really a way to get yourself in trouble in NASDAQ as an index, because it didn't really exist. So you had to trade S&Ps. The S&Ps were dead. Nothing was trading. So the way to get yourself in trouble in 1999 was to trade any other product that had a .com name behind it. Almost similar to what the AI situation is here today, except that they were all shit little companies that nobody had ever heard of. Like, whether it would be Books A Million is what always comes up to my mind, but they could be anything from WorldCom down to anything you can imagine. Anything that anybody even talked about, hey, we're an internet-based company. The stock would go from basically $50 million to $1 billion overnight.
Because they added .com to the back.
Or whatever it was, but people got they were all trying to race. And then you had idiot analysts. Who's the guy that does Business Insider?
Oh,
What's his name? He got banned from the industry.
yeah, I forget his name.
Yeah, I forget his name too, but he got banned. He was an analyst at Merrill or somewhere, and he got banned from the industry because he made all these stupid predictions, just like kind of like what you're doing now. But the crazy thing about that, it was most people that got in trouble with stocks like, for example, Yahoo,
Sure.
which went from whatever nothing to a couple hundred, 300 or 400, and then they bought like Mark Cuban's company for whatever, all this crazy stuff. This is very different.
It is different.
Because 2024 right now, the move you're seeing, these are like real companies.
Real
Those
companies.
weren't real companies then.
And you have passive flows in the marketplace. Passive flows looking for beta.
Yeah.
Passive flows looking for liquidity.
Yeah, but there was some real companies in 1999. I mean, there was like Lucent, there was Sun Microsystems, there was Intel and Cisco, and there were companies that went to levels at the time, which was like, let's call it $500 billion. And there were companies, remember, Lucent went from, because I traded it a ton in 1999, around 100 went to zero. Sun Microsystems went from 125 or 130 to zero. And Cisco went from 100 to 20. You can start to, Oracle went from, I forgot where, but all the way down to $10. I mean, it got really freaking ugly. Every one of these tech stocks that topped out by March of 2000 went basically down 80%. Can NVIDIA drop 80% here? Probably not. But when people start talking like you're talking,
Can it go up 80%?
No.
From here?
no. But when people start talking like you're talking, it does start to bring back these like we used to say for the next 3 years after 2000, we'd be like, I cannot believe I didn't buy 10,000 put spreads, or I can't believe I didn't get short all these stocks.
So here's my question.
Yeah.
You're starting to hear the Uber conversations around AI. Hey, what do you think about NVIDIA? Which I just heard this morning on the way over here. You're starting to hear the barbershop conversations.
Yeah.
When you see these massive stocks make these types of moves, you start to get the inexperienced individual, the new investor.
I'm waiting for
starting
my
ask
mom to call me.
questions.
My mom is the best contraindicator. So when she says that her friend Selma just bought an AI stock, I know that when it hits the 90-year-olds, that we're there.
So I want to ask two questions.
Yeah.
What do you say to the contrarian who's participating in these markets? And how do you keep from getting run? How does a contrarian keep from getting run over in a market like this? That's question number one. And then two, to the new investor who's coming in, who's saying, "Hey, I just read J.P. Morgan upgraded this thing to 925. It's only at 750. What should I do?
Right.
Why shouldn't I? Why shouldn't I get on the train?" What do you say to those two different people?
That's one of the reasons why I had that discussion yesterday with Dylan, and that's one of the reasons why I like the fact that there's a lot of financial media outlets out there that are all talking about this stuff because it engages people. I would much rather.
Oh, I saw that. It was a great episode, by the way. You were defending Kramer.
Yeah.
Yeah, that was wild. Never thought I would see that.
Me either.
I would rather have, if the question is, if somebody came to you brand new, full of cash,
full of cash,
I would much rather
Marry
have
me.
them introduce them to Nick.
Immediately, if not sooner.
I would, or
Have you met my
Vanetta,
son?
or Vanetta. If you can get it, if Vanetta's still available.
Shout out to Vanetta and Nick.
If you can get them to participate in the markets, that would be my number one thing. Just participate. Whatever you want to do, I don't care. You want to buy them, buy them. You want to sell them, sell them. I don't care. I mean, for me, I'm sorry, but I can't buy something at record highs.
I'm the same.
Okay, well then.
Doesn't make it right though because it makes a new record.
I don't. I'm not
I can't
saying
do
right.
it either. I'm not sitting
I'm not
here
saying
playing
I am
devil's
right.
These are
advocate.
the
here.
hardest markets to participate in. The one-way trains to the upside. When you're a cynic or a contrarian, these are almost impossible markets to trade against. So I'm also looking. Talk me off the ledge, Tom, because I'm out there talking to Nicky Bat, who's saying this is Valhalla.
He's
go
long.
buy upside
Yeah,
data.
he's long.
and he's not
NVIDIA.
wrong. And he's not wrong, Tom.
Then go do it. Right. That's the beauty. That's the thing. Now it doesn't matter. Like you got to do it. Like I've been buying put spreads all morning. I don't know if I'm gonna be right. I don't know if I'm gonna be right. I'm not downing money yet. I'm not up any, down any. They're about even. But I mean, We're up 75 points we're up 75 handles in the S&Ps. We're up 400 in the Nasdaq. I'd rather buy put spreads here. Somebody else would rather buy call spreads. I don't know.
Thomas, I yearn for a world that doesn't exist anymore, my friend.
What is that word?
I yearn for the world where you said hi to your neighbor. You didn't look at your phone.
No,
I yearn
in
for
your
a
mind,
world where we go out and we do hard work with our hands, Thomas. We don't get on our phones.
He never did that. He never did that. His dad owned the reservoir.
By the
He
way,
was not doing that.
I say this because did you know AT&T had a massive outage this morning?
I did not.
For over 40 minutes.
Yeah.
For over 40 minutes, I had no cell phone service, Thomas, this morning. Greatest thing that ever happened to me. You know what? I had a terrific conversation with the Uber driver, and then I thought, if we are
How'd you get the Uber driver?
That was before. I had Wi-Fi at the house before I left. If we're moving to a world that's increasingly digital, or if we're going to put our whole economy on these chips, don't we have increased single point of failure risk? Do we not have increased single point of failure risk? And then I look at all these.
So.
You don't think so?
No.
Okay, so cybersecurity, that's not an issue for you. It doesn't matter we're putting nukes in space. It doesn't matter.
Here we
go. I'm just saying, one of the top 3 major carriers this morning was down for 45 minutes. And you couldn't do anything.
Technology breaks. I mean,
here's my point.
Yeah.
If what I'm saying is in any way interesting, yesterday Palo Alto Networks got absolutely crushed with their earnings report. They were down 30%. Sometimes the market throws out the baby with the bathwater. So you got Zscaler, CrowdStrike, you name the cybersecurity company that was also down double digits yesterday. If you're in any way a prepper like I am, and you yearn for, that old world where we grab the hammer and nails.
Where are you going with this? You got me.
I'm just saying, if you want something else than the AI world, if we're moving to that AI world, we got to protect it. And this stuff was down 10 to 15%. If you don't want to fire against them, to me, what I say is, how do I go to second and third order effects? I'm like you. I can't buy NVIDIA. I can't buy ARM. I can't buy that stuff.
Okay.
But I look for second and third order effects that might be trading a little bit cheaper as opportunities. That's what I would say to the new person.
And give me an example of that.
I just did. I gave you 3 names: Zscaler, CrowdStrike.
You're talking about just security, the other side.
Yeah, the second and third order effect. Go to second and third order opportunities. Don't jump on the train with everybody else.
To me, that's first of all, I'm not jumping on the train with everybody else. I'm taking the exact opposite side because I think that's the way you got to play this, and that's not where I necessarily see opportunity. I like things that are over. I like things that I think are oversold. I don't necessarily think those, are necessarily oversold. But I think you described an interesting scenario before. You kind of talked about the scenario that you painted was something that is incredibly difficult too.
What?
Bottoms are just as hard as tops. And when this market was bottoming out in 2009 or 2018 or 2020 in the pandemic, it's almost impossible to pull the trigger. When you get to the point where you cannot pull the trigger to buy them, that's kind of when you have to buy them. If you think we're close to the point where you can't pull the trigger to sell them, which is kind of where I feel like we're at right now. Like, I feel I was buying.
He's talking himself into selling them right now. You're watching a man talk himself into selling them right now. I had him doing good, not selling them.
I'm sorry.
Saved him $10, and now you're aggravating him, and now he's going to sell them.
The reason I bought put spreads this morning, and I'm not like making this. There's no story here. The reason I bought put spreads this morning is because I couldn't even imagine a single person trying to get short this morning.
Okay.
That's why.
Fair enough.
And so, just like, I bought a lot of bottoms throughout my career. I mean, I've also bought them way too early, but I have bought some really good bottoms. And it's when you just cannot bring yourself to buy anything. It's like when you want to roll down all your calls, and it's like right now I want to roll up all my puts. I want to just, I'm like, it's really hard to get short. Now you got to be short.
Famous last words.
Famous last words.
You and I in about 3 months are going to have the same net worth. You know that?
That would be that. Well,
you don't know what to say. You don't know what to say to that.
that could be really good for you.
Me or you?
Could be really good for you. Could be really bad for me.
Fair
But
enough.
yeah. But I guess I'll root for I'll take the glass half full and root for you. That
Last thing.
yeah.
Because sometimes your mind confuses me and delights me at the same time,
God.
Thomas. Last week, I feel like you were arguing that the economy was terrific. Everything was great. Be optimistic about the future, and at the same time, you want to. You effectively are shorting the financial marketplace. Help me
No,
understand.
I actually am not shorting the financial.
I'm not saying these two things are different, because the real economy is very different than the financial marketplace,
Okay.
especially now, in my personal opinion. But I was wondering, walk me through how you think about that, because I know you don't care about the outside world, but China's in deflation, Germany's in a technical recession, Japan's in a technical recession, the UK's in a technical recession, the global economy appears to be rolling over. The U.S. economy has signs of weakness, with the exception of 7 companies. But you are both glass half full on the economy, glass half empty on the financial markets. How does that work?
Glass half full.
You're positive the economy. You tell me nothing's wrong. You say houses are fine. Get
Yeah.
out there, get a job.
Yeah.
Pull up your bootstraps. Everything's fine.
Yeah.
Don't worry.
Yeah.
But then you're also saying markets are extended. This thing needs to roll over.
I'm a trader. You're confusing trading.
I'm not. I'm asking you
I
to
really
explain
believe
the position. I'm not
I will
confusing
explain
it.
my position. I really think you're confusing trading. I do think if you measure things by how the stock market, I mean, if you're an efficient market person, you believe that the stock market actually presents the best validation of how strong the economy is and where we are in whatever cycle we're in or anything like that. And with the stock market at record highs, it's impossible to argue that we're not, this isn't, this is as good as it gets. I mean, when the stock market's at record highs, it's as good as it gets. That's all there is to it. It's not just 1 or 2 stocks. It's the broad markets at record highs. The S&P 500s are at record highs. This is as
Not
good
just
as it
1 or 2
gets.
stocks, it's 7 of them.
This is as good as it gets. So when the stock market is delivering record highs, you can't argue that the economy's not doing well or I mean, I can't stand this recession or everything else. But as a trader, this is where we're conflicted, because as a trader, you have to be able to sell when everybody else is buying and buy when everybody else is selling. You just have to. And that's where the challenges are. I'm not saying that's easy. I'm just saying that's what I do.
Last question. I know I just said that, but what is more interesting to you right now? Is it the outright short delta on either the NASDAQ or the extended stocks, we'll call them, like NVIDIA, or is it a relative trade where you're long, let's say, underperforming areas of the market, whether that's some of the smaller cap companies or almost all of the S&P 500 companies that aren't performing? Like, what's more interesting to you in this marketplace, the outright short or the relative plays where you're looking for performance to come back in line?
There is no easy answer to that question. I mean, I have both positions on. So when you see divergences between major indices and or durations, like or maturities, like in the bond market, it could be maturities. In the bond market, it could be, just 2s versus 5s versus 10s versus 30s, whatever it is. In the stock market, it's usually index versus index. And when you see the Russell up $7 today and the S&P's, which is nothing, and the S&P's up $70 or the NASDAQ up,
which is
400,
2%,
okay.
1.5%.
I mean, you're talking about a Russell NASDAQ trade right now that today has moved, just on a one lot, $8,000. It's an insane number, and so that does interest me a lot. Like the fact that the small caps have grossly underperformed relative to the other indices. I'm long small caps. That fits into my contrarian mode. I'm long small caps, short everything else. So I am long certain things like that. The other side to it is that the just naked short, not naked shorts, but just delta shorts on this market here are interesting to me just because everything's. I mean, I'm not going to buy them at 5,100. I don't know. Like, listen, I don't know what's going to happen next, but they're not that interesting to me at 5,100. That's all there is to it. Maybe they go to 5,200 or 5,300. Fine, so be it. And I've been wrong plenty times, but it's just the way I trade. Now, my core positions are still short a lot of premium, and we'll see what happens.
Let's get back to the world where we grab our hammers and not our AI goggles, my friends. March 4th, everybody.
Beautiful. I love it.